What's going on, everybody? How are we all doing? Back again for the second week in a row with Market Watchlist. It's amazing that I've managed to do 2 weeks consecutively. Well, let's wait and see if I get this video uploaded first. But I just wanted to talk quickly about what we saw towards the back end of last week. We saw a lot of volatility come into the market, and that's something a lot of people have said we haven't seen these conditions for a while, maybe potentially since 08-09 when the big crash was. And we saw some pairs move around 400-500 pips and a lot of whipsaw price action. And the interesting thing is that was the last week of February, so we've seen some very interesting monthly closes. And something you should do in terms of your trade analysis is whenever it's a new month, when you're coming into the first week of a new month, you should always start on the monthly. Just because you've got a new candle close, you've got new information, that can really inform your bias for the pair for the next few weeks ahead and even for the next few months. So that is how we're going to start today on all the pairs that I do cover. I'm only going to cover about 4 or 5, but I'm going to cover them in a lot of detail. Keep the video as short and as sweet as possible. And as we've seen for the past few weeks, we saw this consistent, as I said, starting out on the monthly. So we saw this massive buying pressure for the last 2, 3, even 4 weeks on the DXY. And then we finally peaked up towards 100 and saw a violent rejection. And now what you can see on this monthly candle is a very clear shooting star. As we have, if you're looking at this high being the last significant high, have we technically created a lower high? I would say yes. And what this indicates, this candlestick, is that the sellers have come back in and the buyers have kind of faded away now. If it is just for a pullback, that'll be interesting to see or not this week. If we move on to the weekly, we can see we've got this ascending trend line here, and we've got a massive bearish engulfing from the last week. As I said, we saw the buyers get taken out the market, and it'd be interesting to see where this does stop. Will we come down for a retest of around 97.33, which is the last previous low on the daily, and maybe come for some form of a third touch on this ascending trend line, and maybe, who knows, even break below and see further downside. We're in a bit of limbo at the moment, as I mentioned. This is the last significant low, so if we did break below this, we would then be negating the bullish structure, which would then obviously mean a weaker US dollar. But with this rather large pullback last week, we did see a lot of moves on Euro USD, which I did cover, which saw a good move to the upside, which was a very nice 8% full trade if anybody swung it to the point that it's at now. But if we just take a fib from this low to this, now we have stalled around the 71% fib level, and it will be interesting to see the reaction from here. As you saw the very bearish price action on the monthly and the weekly, will this just be some form of retracement, or will we see the start of a new trend? And then that will obviously correlate over to Euro USD, which we will cover. But until we negate this low, we are still in a bullish structure. So currently just waiting for any strong rejections from either the 71 level or the 78.6, and we'll see how price action goes from there. So we jumped on to Euro USD. And as I mentioned, we're starting all of these trading pairs on the monthly time frame. And you can see the last monthly closure was this hammer candle, which did reject the weekly level of 1.0975. So what this shows is that the heavy selling pressure that we've had on this pair for quite a long time seems to be wearing out, if you like, and it looks like the buyers may be ready to step back in. It could just be for a short-term period, but this shows a serious rejection of this price here. As you can see, it's been rejected multiple times for almost like a liquidity zone with this pair, and we rejected the key level of 1.0975. So then we take that into the weekly, and what we saw is this nice spinning top here, followed by this bearish engulfing, which is a powerful, powerful sign that we are going to see further upside on this pair. Will it only be a retracement to the weekly 50, or was this just a 1 week retracement? We wait and see. And we've got to wait for the market to make its move. Right now we are on the 78.6 bearish fib taken from this high to this low. and this is a very prime area of reversal. However, with how impulsive this pullback was, it could be the sign of a new trend about to start. Hence why I've got this bullish fib drawn here, as what we could see is price reject this area here, fall down into the 38.2, which after very large impulses we know is quite a reliable level, and then make a move to the upside, negating this high, and then forming a new trend, retesting and going from there. But you've got to trade with the trend. So currently we are still in this bearish structure. So there could be a good chance of this is a very good continuation trade if you can find the right criteria to get in. I am currently in this trade short, and as you could see, we had this nice bearish engulfing on the 4-hour, which was near where I got in. And it'll be interesting to see where we go from here. If you wanted to take potentially a safe entry on this pair, you could just wait for a break and retest of either the 1-hour 50 or wait for a break and retest of this trend line, which also counts for a close below the 1-hour 50. As you can see, we've slightly made a lower high on the 1 hour, potentially indicating a change of structure. Wait for the break below, new low on the 1 hour, wait for the retest, and then take it down to your initial target, wherever that may be, which could be the 38.2 bullish fib that I did mention. Next, we're going to go on to CAD yen, and again on the monthly, we saw this nice third touch of this descending trend line and a disgusting shooting star on the weekly. A strong rejection of the weekly 50 EMA, falling around 400 pips, and this hasn't been helped obviously by the global events that are going on, but fundamentals do push the technicals in my eyes. So we saw the weak oil and the strong Japanese safe haven yen flow in to drop this around 400 pips last week. So because the current state of the coronavirus and the fears of it not going away currently, we could see a lot further downside on this pair. As you can see recently, even around 3 or 4 years ago, we've been around 76.00. So there could still be 400 pips to the downside on this pair. And then looking on the weekly, it's just confirming the bias of this rather large bearish engulfing. And this is why, guys, you need to know the overall trend for what you're looking for. Because now, just from looking at this on the monthly and the weekly very quickly, I know that I need to look to sell. I know that I need to look to sell this pair on any retracement. I'm just now looking for any place to sell this pair in regards to a nice solid retracement. Obviously, we don't want to be selling at this level because after a strong impulse, you're always expecting a retracement as the markets don't move in straight line, guys. You know, if you've watched a few of my videos by now, this is how the markets work. So the first area of interest is around 81.75 to 81.200. And again, the 38.2, very reliable, especially in these market conditions of these, sharp impulsive moves. And we've got this nice little market structure here where we can see was previous support potentially could turn to resistance. And then if we do push through that, we also do have a nice level around the 50% fib, which actually the 4-hour 50 will be around the 38.2, which would add an additional confidence. But we have also market structure here. So if price does interact with these two levels, if we just look on the daily as well, yeah, so if price did come back up to the 50%, you'd have the daily to protect you as well. So these are two key areas where I'll be looking to short this pair this week. We have a very, very similar story on Aussie yen here. But the difference is here, can you see how we've failed to break through this key level of 70 again with this pair? And we could very well see further downside, but I'm interested in buying the retracement on this pair in order to then go short on it again. But just as a counter trend move, if you do have a strategy that works for that, then this could be a very good pair for this week. A very similar story. You've got impulse, correction, impulse, and a massive bearish engulfing. But as I've mentioned again, we failed to close below this level. If we didn't see the retracement, you could just simply wait for a break of this level, a retest, and then sell. As you can see, if we go on the weekly here, we've got so much room to the downside, and we've even been here, not relatively recently, but we've not been down this low since 08, 09. So if we do break below, there are a lot of stops could get triggered, and this could fall dramatically to the downside. So we are again looking for a very similar story to CAD yen. We're just looking for the retracement. and I will be looking to buy this retracement based on my reversal criteria setup. And then when price does interact with one of these levels, I will be looking to show this pair to the downside. And we've got a few interesting levels that we could pick out. We've got the 38.2 here, which, as I mentioned so many times in this video already, key reliable level after sharp impulses, which we can see we had here with this pair again dropping around 400 pips. All the yen pairs are very similar as they follow the same nature almost. So you got 38.2 here, major market structure level. Same with the 50% major market structure level and 50% fib level, and then the 61.8 fib level, again market structure here and here. Then obviously the 61.8 we know is a very reliable level too. And by the time if it did go to the 61.8, you would have the daily 50 EMA in the way in order to add an additional confidence to your shorts. Now, in terms of buying the retracement, you could just wait for a break and retest of this trend line. It is risky, but if you're having a reversal strategy that works in your favour and you have back tested it, then there's no reason why this couldn't be a very nice trade for this week. Because even if we're looking at the 50% fib level, that's around 170 pips away from current price. Be interesting to see the market opening, just because of various data on the weekend of China PMIs and how that'll affect the Australian New Zealand dollar, as they're very closely correlated, Australian dollar and New Zealand dollar, to China, just because of how close they are in terms of geographical location. But then also they're a major trading partner, and whatever tends to affect China has a negative effect on the Australian and New Zealand economy. Now we're moving on to pound New Zealand, a pair that I caught two very good trades on last week. Made around 7% overall. And this is an interesting one because it does look like we are quite oversold, especially on the lower time frames. And we had a bullish engulfing in the month of January. And we had a nice rejection of the monthly 50. But within the last month, price hasn't really moved that much. This can be classed as a potential buyer exhaustion candle, just in terms of there hasn't really been much push to the upside, and it's what we can class as a hanging man at the end of a bullish trend. That's not to say the trend is yet over. However, we are in a very strong liquidity zone right now, which is where it's by its name, a lot of liquidity does come into the market, as you can see around this level constantly, here, 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 and here, and potentially where we are now. So we'll take that into the lower time frames and see what analysis we can get off it. Moving into the weekly, as you can see, price had a lot of conviction in the last week of January, and as you can see on the monthly, which I just showed on the monthly, it's not really moved that much. There's no more buyer conviction. However, with the pound news and Brexit, any positive news comes out, if we look quickly back on the monthly again, we've got a lot of upside if we do break through this level. So that is always a key thing to look out for when we are trading pound pairs. We are still in a bullish trend, so we have to take that into account. So hence why I've got this bullish fib drawn on, just to see any areas of interest because I do have a short bias on this pair, just to see if there's any areas of interest where the bulls might step in again. But even on the daily, you can see this rather large rejection of this outer structure on Friday, which I did fortunately benefit from. So this area of the 38.2 and what will be the daily 50, potentially a ascending trend line, could be a good target for any shorts that are taken. However, we are forming what does look like on the daily this ascending wedge, and this is a bearish reversal pattern as price becomes squeezed. What we would expect to see is price to become squeezed and squeezed and squeezed, maybe go up for a third touch, and then drop out towards the downside, which does also add an additional confidence to my short bias. So I've just moved on to the 1 hour time frame, and there are various ways you could approach this pair. I am currently in this pair from around 2.0639. I've got a very small position on this pair. As I said, I'm expecting gaps at market open. So what if you wanted to get into this pair short, if you agree with my bias, Then what you could wait for is a new low on the 1 hour, breaking below this low here, and then breaking out of this ascending trend line. Wait for the retest, which will match with the 1 hour 50 and the broken ascending trend line, and then short it towards your targets. You could say that is still risky as we are trading against the trend, so if you wanted to wait for a change on the 4 hour trend, if that suits your trading rules, then all you've simply got to do is wait for a break below the 4 hour 50 and this low here. So that means we're negating this low. We are now in a bearish structure. Wait for the break below. Get the retest. Wait to see a rejection from this area. Then short down. Here is the 38.2. So as you can see, even if you wait for this break of this 4 hour low, retest, you've still got around, let's have a look, 150 pips on offer, is it? Yeah, 150 pips on offer from here. So with these pairs, even if you had, obviously you need price action to confirm where you put your stop loss. Say with a 55, 60 pip stop loss, it's still a 2-3% trade. So if you're on the safer side of caution with your trading, you don't like being too risky, this could be an alternative entry for you. Another very interesting monthly close is on Euro Australian dollar. We saw this pair recover a lot within the last 2 months, and you can see by this hammer candle here, we've not really showed any signs of slowing down, especially with quite a full body close, not really much of a wick towards the top of this monthly candle. So I am expecting further upside for this pair currently. However, I will be looking to try and get a counter trend trade in selling the retracement. The reason why I say this, as we've seen major buying on this pair within the last 2 weeks, well, really 3 weeks. As you can see, we're at 1.6115, and then we've jumped up around 800-900 pips within the space of 3 weeks. So just looking to buy this pair after a retracement has been formed. And as you can see, we are quite a way long off these 38.2 and 50% fib levels, which could provide us with a nice opportunity to sell a retracement if we do see any strength from Aussie or New Zealand pairs, maybe from a coronavirus alleviating the fears, or any other potential economic developments from Australia and New Zealand. So what I really like about this is the 38.2, which, there you go, it's gone off my screen a bit, but this is the 38.2. Lines up with this ascending trend line here, and this could be a nice potential target for a short, which offers around 400 pips if you do manage to get in where price is around currently this week. So again, looking on the 1 hour, we've just seen this massive gap at market open of around 100 pips, thanks to the weak Chinese PMIs, as I did mention prior in this video. But if you're looking to short this, what you could wait to see, again, is very similar story to the one I mentioned before, is a break below the 1 hour, most recent low, wait for a retest, and then short it, which will lead to a nice fourth touch, of this ascending trend line, and a good risk to reward, and a better discounted price in order to maybe see this pair go long. Again, this is a riskier trade. Trade with what your own appetite is. This week's market watch list has got a lot of trend continuation trades, which even this one is. If we take away buying this retracement, this entry here will be a trade continuation. If that's your risk appetite, go with that. But I'm just providing a bit of everything for people, because people might not want to wait until the 38.2 in order to get in this trade. They might want to sell it both ways, sell the retracement and buy the impulse. There's absolutely nothing wrong with that. So that's the end of the video for today, guys. Quite a short one for me this week, but we've gone into depth on a few pairs. There's quite a few good reversal opportunities, and then after they've taken place, if they do, a few good trend continuation entries, which we may see this week after the gaps have settled, which as you can see on this pair, especially Euro Aussie, gaps opened around 100 pips on market. So it'll be interesting to see after the Monday morning European session is out of the way where the markets are at. So thank you very much for tuning in. I'll be over on my Instagram all week putting the analysis of these trades on if I do take any of them. Feel free to go over there and check it out, and maybe even get involved in some of the trades yourself. Drop me a DM or a comment below if you want to know more, if you're interested in knowing more about this analysis or anything more about trading and my journey. But that's it for this time, guys. Thank you very much for tuning in. Don't forget to like, comment, and subscribe, and I'll catch you all in the next video.